Hello, welcome back to Trade in Your Job with Matt. Today we'll be looking at one of my favorite ETFs to trade. It's ticker symbol XBI. It's a biotech ETF. It's very liquid. It has dynamic price action. You can trade it in both directions very easily with calls and puts, and it really tends to follow technical indicators. We'll just go over some of those indicators and when I accumulate calls or puts and just simple strategies that you can implement in your trading. Even if you don't want to trade this particular ETF, you can use these strategies. If you're not subscribed yet, I put out a short last week and I published the short up when XBI was out touching the Bollinger Band and overextended on the channel commodity index, saying it might be a good time to buy puts. And those puts really paid off through the rest of the week. I then closed them out and I started purchasing some calls. So if you like alerts like that, I plan to start doing more of those through shorts. So make sure to check those out. Since I'll be talking about trading options and buying calls and puts, if you're not familiar with that, I have a intro series, 3 videos worth of options, and I'll link those down below. You can check those out first to make sure that you understand everything that I'm talking about here. I've been trading XBI for a couple months now, and in one account, realized gain so far almost $14,000, and in the other account about $2,500. So, that's not using a ton of money. I just trade when the setup's there, and sometimes I use that money for other setups that I like more. You don't have to jump right in on any of these. You can buy as many contracts or as few contracts as you want. Remember, position sizing is important. You want to size your position to your account so that you don't wipe out your account in one trade that doesn't go your way, and just manage your risk. And I'll go over those things. There's another really similar and really liquid ETF you could also do this with is the iShares Biotechnology, ticker IBB. So the same strategies you can use on this. So first, starting out on the monthly time frame, just really long time periods going back to 2009. And the indicators that I like to use to trade in general, I look for a confluence of indicators, but the main ones I use for good times to accumulate are the Channel Commodity Index, it's CCI for short. Sometimes I look at the Relative Strength Index, RSI. I look at the Moving Average Conversions and Slow Stochastics. And it's important to also watch if money is going into or out of, and I use that as a contrarian indicator. So that's my setup. I know it's a lot of indicators down below. I also have the Bollinger Bands on the chart here. Those tell you, standard deviations, and price tends to follow an average price and standard deviations. If you remember a bell curve, when you get a few standard deviations away, that's an extreme move. And that'll tell you that things are likely to revert to the mean. So all those together, I use them to look at good times and bad times to enter. These would be really long time periods that you're looking at. And how many times on the Channel Commodity Index has XBI been oversold, meaning below this negative 100 down here in that 14-year span? Well, I count 2, 3, 4, 5, 6 times in 14 years, and that's not really a very frequent signal. If you were going to use these, you would want to buy leaps because these are really long time periods, and leaps go for years. So you'd be buying, in 2022 down, when we're hitting this Bollinger Band down here, if you're buying leaps, you could be back in the money now that price is close to, $90 a share. And you don't want to use this chart to do any kind of short-term trading. These would be long trends. You can see when we're in uptrends, really long uptrend. Sometimes when you're in an uptrend, the most kind of correction you get is down to the middle Bollinger Band. You can see a few times where it's gone from the upper Bollinger Band down to the middle, and then it resumes its uptrend. Other times it goes down to the middle, you get a short burst, and then a sell-off. So I like to use the Bollinger Bands as just telling you when extremes are met, and on the monthly time frame, it can remain or it can ride that Bollinger Band for extremes for months. These are months. You don't want to use a monthly chart for short-term trading. Now we're looking at the weekly chart. These would be for people that want to do position trading for a few weeks, and they want to, buy their calls or puts to hold on to them for a few weeks to a few months for the move to play out. Still use the same indicators, but you can see that the time frame now is only 2.5 years, and the number of oversold conditions is much more frequent. So you get 1, 2, 3, 4, 5, 6 in that time frame. And those would be a good time to buy calls. You can also see that when it's overbought, meaning above 100 on the Channel Commodity Index, those might be good times to buy puts. You can get very big run-ups on the weekly chart, if you were on the wrong side of this move, this is 1, 2, 3, 4, 5 months where you would think you were a really dumb person if you had bought puts based on this chart. And so that's why when I talk about position sizing, and in my videos on options, I talked about giving yourself time. So if you're going to trade on the weekly chart, you want to give yourself, a year for the move to play out, and maybe even the chance to average down the cost of your contracts. But I like to use the weekly chart just to get an idea of which direction the trend tends to be going right now. So you can see that in this time frame, we're in an ascending wedge here. Other times that we've been ascending like that, as soon as we reach the upper Bollinger Band, we get a decent sell-off. The upper Bollinger Band right now is at the 92 level. So it's totally possible we could hit that, in the next few weeks. Now we're drilling down even further to the daily time frame. And when I said there's dynamic price action, this is starting to illustrate what I mean. So during the course of a month, you had a lot of opportunities in both directions to buy calls or puts. And even if you were wrong initially, the price action being dynamic means that your contracts can go in the money pretty easily. And so I like to trade this on a shorter time frame. I look at the daily chart, and I'm going to show you the hourly and even down to the 15-minute next. You can see that you still use the same channel commodity index for your oversold or overbought conditions. So when you're oversold, that's when I like to buy calls. And when we're overbought, that's when I like to buy puts. And so I'm betting on reversion to the mean. And I'm also betting that these are good times to enter on the daily time frame. I'd be looking at 3 months out when I'm buying. And you can get in and out of those contracts before the expiration date. So you're not holding them till expiration. You just want to give yourself time when you're buying options for the moves to play out. And when you're on the daily time frame, you can really see the illustration of that. Now we're down to the hourly chart. So every candle represents 60 minutes of price action. And you can still see that your indicators are really good for when to accumulate calls or when to sell your calls and when to accumulate puts. And the dynamic price action that I was talking about, these are a few percent moves in a day. If you're accumulating when you're down in the oversold conditions, during the next few days or weeks, you're likely to have those contracts be in the money where you can sell them and then look to go the other direction. With options, the nice thing is that they are trade date +1 to settle. So when you sell them, that cash is settled and ready to go the next day. Not like when you buy an ETF or sell a stock or ETF where it takes a couple days for settlement and you can trade on unsettled funds and get in trouble. So I also like trading options for that reason, is that money is ready to go again the next day. As I mentioned last week, I sent out a short when price action was up here touching the upper Bollinger Band and overextended. This is a negative divergence. When you get a lower high from the other high here, that's a negative divergence, and I use that as an indicator to accumulate puts. So I accumulated a lot of puts here. I think I bought like 25. And when price went down the next few days, I took some of them off the table, and then I took more off the table. And then on Thursday and Friday, I started buying calls, and those were in the money as of market close on Friday. There's also a gap up here at 87. Really love for this price to go back up and fill that gap before doing anything else. And finally, we're down to the 15-minute chart. You see a 15-minute here. So every candle is 15 minutes of price action. You can further see dynamic price action. You can get big gap ups at market open, and then that'll fade through the rest of the day. So on this day, this is where I called out the price action. So I looked on the hourly chart. I saw that it was overextended even on the hourly time frame. But for entry, you drill down to 15-minute or even 5-minute to see, okay, we're outside of this Bollinger Band. That is an extreme price movement. You can see that other times it's gone outside the Bollinger Band. That's caused it to like revert back to the mean. So I like to use the 15-minute time frame for more specific entries on when I'm buying my calls and puts. And when I said that I sold some of those, I sold because on the 15-minute time frame here, we're already touching the Bollinger Band. Now that could be a spot where price resumes, the other direction. And there was also a gap here, and I always respect a gap to the upside because those tend to get filled. So on the 15-minute time frame, already kind of in the overbought phase as of Friday. Market open tomorrow, we could have a gap up. We could go fill this 87 gap in a day. Or if it opens down lower, I'd probably buy more calls. I'd be interested to hear how these strategies work for you if you try to implement them. Please let me know in the comments in the coming weeks how they go for you. And if you need any help, please let me know what I can do to make it more clear or help you out in your trading. If you enjoyed this video, please like, comment, or share with a friend, and stick around for future content. Till next time.